Profitable trading style. Of course, we've talked about it irrespective as far as trading is concerned. First of all, that don't have too many instruments you want to trade. Select few instruments to trade. If you're a forex trader, you want to trade commodity, pick one or two commodities, or maybe NAS 100, US 30, gold, and all of that. If you currency, pick currency that you know that have a very tight spread, like Euro USD, and has very good volumes. Euro USD, GBP USD, and then maybe USD JPY and all of that. So now I'm starting with NAS 100. Now, so for crypto, Bitcoin, Ethereum, and Solana is okay for you. In fact, as a beginner, just trade only Bitcoin. If you are doing active trading, like you are doing future trading. So, but if you are doing spot, of course, there's a need to diversify to other coins that are going to move and give you more volume. But if you are just going to be a strategic trading in crypto for future trading, then you want to stay on Bitcoin. So let me go first. We've talked about market analysis. So first thing is the top-down analysis and or market structure setting. So you want to set up your market environment. So I'm going to structure on daily time frame. So you can still go to weekly, but of course you can see. So I'm just staying on daily time frame now. So just to the key levels. So I want to identify some key levels that are very significant. So not all key levels are significant, so you want to pick some significant key levels. All right, so I go by this. I just want to find some levels that have some connections and not like. So we're going to do that straight away. Okay, so I can do that, not only one or two. So these are like major key levels. I think these are okay. All right, these are okay. So now, but look at what I first do. I have to change my candlestick to line chart, and that's exactly what you're seeing. So this daily time frame. So you can see very neat, very simple, very neat, right? So that the next thing you want to do is to identify. So in a day, you want to see some market and all of that. So I'm going to do the same thing. So you can follow my style and do others. So this is Euro USD. So you can see all to do is to go back to line chart, and I take my normally withdraw it by zones. So I just take my own and increase it to be very thick. Okay, so I don't need to disturb myself unnecessarily. Okay, so here was a key level ordinarily before it was broken. So, but you that you are coming now, probably maybe here, you find, right? And then, so let's look at, do we find here, is it necessary? I don't think so. So we can find another point here. Okay, so you can adjust it to fit into whatever right now. So let's look at maybe somewhere here. So we can find some key levels here, here, and current point now, right? Okay, so now let's go. Then we're going to pick another one here. Look at it. It was obvious here. So here, right? So can I still find another place? Yes, somewhere here. Look at it. Okay, so somewhere here. So this is a key level. So let's enable the candlestick. You're gonna see, right? So it's actually at a key level right now. So you're expecting a bounce from here or a break and retest and continue downward. And that's exactly what you are doing from key level to key level. All right. So we're going to go to another instrument. So let's take, so that's why you trade fewer instruments. If you are a professional and to be profitable, a professional profitable trader, okay, so that's exactly what you want to do. You don't want to move around with too many things and all of that. So there we go. So we fix this, the same thing. We come to the bottom, then we go to the middle and check some important key levels. Okay, so we can take this now. Yeah, it's more correlated and have more touch point. All right, so let's take this. Right, so with touch point one. Okay. So let's first fix this because we have about 2 touch points. It's more significant. Okay, this more significant. So it's not just to put touch points, to put significant touch points, okay, that have not only one touch point, but you have several touch points, okay, and not just line, candlestick crossing and all of that. You want to have a return significant area Okay, so this, I think this two can go. Yeah, so look at it. By the time you're going to see the wick touching this thing, look at it. So let's go to the candle. You can see now this is very significant. All right, so very, very, very simple. Very, very, very simple. That's one thing you need to do. Okay, so you can do it everything. So look at gold, the same thing on gold. Okay, I think when I was giving a signal, I was telling them how that support level is strong. Okay, so the same thing, I go to line chart, right, and then I move it here. So to get the roof, and perhaps maybe just a normal over here. So just to then let's go here. All right, and so let's go here. Okay, all right, so let's go here. So you can adjust it over time. So maybe we can find one here. So yeah, something. Okay, so if you enable the candlestick, you're going to see the wick and all of that, which makes sense, right? So that's exactly what you do. So Bitcoin, the same thing. So Bitcoin, right? So let's take off all of this. So make your trade simple. But I think where we have complex trading is that when we have too many instruments to trade. I think one of the biggest error or problem we face as a trader is that when we trade too many instruments at a time, we begin to struggle. Now, remember, a professional trader is person who is coming and let's say professional career trader. So let me not just say professional trader, professional career trader. So let me call it that way. I think it would be better that way, right? Professional career trader. Let's call it that way. So professional career trader, because it's your job, you're going to be working on it every day, So you are a professional career trader. All right. So professional career trader. Okay, I just want to mark some of those significant points anyway. So let's leave it this way. This is Bitcoin. So professional career trader. So let's use that language. Because if I just say professional trader, that may not really make a lot of sense because professional career trader. So meaning a career trader is going to be coming every day. He's going to be, showing up every day. So, and then as a professional career trader, you now need to identify which of the trade style do I want to actually face more. I want to be a swing trader, or I want to be a day trader, or I just want to be a scalper, because a day trader not necessarily mean a scalper. So a scalper, they just pick small, small, and then so intraday trader. Okay, we have intraday trader, we have day traders. So day trader closes trade every day. No position they open, they must close it for that day. So that's a day trader. All right. So intraday traders can open a trade and allow it to run for a few days, right? So if the trade did not close for that day, it's not bothered. Okay. So that's an intraday trader. So, and they don't always be in the market at all times. So you can enter your position and set your take profit, stop loss, and go away. And so they do not actually deal on lower time frame so much. They deal much of medium time frame. That's intraday trader, right? So a swing trader do more of higher time frame and a medium time frame. So if you say higher time frame, like from 4 hours to daily to weekly and all of that, those are swing traders. That's what they do. So they deal more on higher time frame, right? So medium time frame, like 1 hour, right? 1 hour, 30 minutes, 15 minutes. So intraday trader deal most on that. Intraday traders, day trader deal more of like lower time frame too. So like yeah, so like 15 minutes, 5 minutes, 1 minute. Yeah. So they do more of that. Okay. So so let's stop here. Okay, Solana. So I just want to fix all of this. Okay. And then so when you come into the market, what you are checking and what you want to do, things that influence your decision. Those of you who are in the class in our training, I'm sure you have okay, I'm sure you have, sorry, just a moment. Those of you who are on our platform, I'm sure you have passed through all of those basic things that are to be done and what you need to know, or what you need to pay attention to in your trading. It's very, very important. So I'm sure we've been doing that a lot. And so this is like, I'm just doing a kind of executive summary and hand-on kind of interaction. And that's the whole essence of this. So I want to be a professional, career profitable trader. So professional, career profitable trader. So because it's not enough to be a career trader, it is important to be profitable. So if you are not profitable, so being a career trader, what does it really make? Okay, you have to be profitable. And one of the lovely aspects of today is the fact that we have platforms that have money for you, but you just show your skill. And that's why to learn this trading skill is very, very important. You can imagine you are looking for loan for business, all right? Conventional business. And you are asked for all manner of collateral and all of that. But here we come. Just acquire these relevant skills. You have money. So people, companies, venture capitalists, they are available to give you money, right? So when you acquire this skill now, so the trading capital is no longer your problem. You can see, you can just subscribe, and that's why we have things like AKASHX, where in fact, one of the lovely things about the AKASHX is that it still gives you room for all of this knowledge. So all of this knowledge, you acquire all of this knowledge and then just apply. But of course, sometimes many acquire all this knowledge, but personal development is a problem. Most of us, to develop your psychology and all the necessary strategy to be effective in your trading is one of the biggest problem a lot of people have right now. So we are eager, we are rushing, we want to just achieve the success, hit and run and all of that. So that's why it's important you pay attention to, what they're showing to us. So top-down analysis, okay? So let's look at this. Maybe we'll take this one. We'll have more touch point. This one is going to touch, this one's going to touch. You say, Felix, how do you know? Let's go. Just enable the candlestick now. You're going to see. All right. So very good. Okay, so now, so Bitcoin, you can see what it's doing. All right. So Bitcoin is doing what it's doing. All right. So Bitcoin is doing what it's doing. And so you can see Ethereum, Chainlink is actually getting to pushed out of a region, right? Getting to pushed out of a particular key level. So what you want here, so when you come in a day, you probably just open your chart as a day career professional trader. First, you want to go to your chart plane and see what's happening from key level to key level, all right? Sometimes we talk about alignment. Now, when we talk about alignment, you go to weekly sometime. You want to see weekly candle, right? Weekly candle is bullish, right? The weekly candle is bullish. You want to go to daily, right? So weekly candle to daily candle is bullish. Of course, just open, not long, right? Now, you want to look at 4 hours. So let's look at 4 hours. Okay, 4 hours market trend, all right, is equally bullish, right? This is a low. This is a low, all right? This is a low, this is a high, 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 right? So, but we need to break this. Now, we have broken this high, we need to break this key level. Once we break this key level, you want to stay above this key level. So you are looking for trading up to the next level. So which make a lot of sense. Now, if you go to daily time frame, very simple. If I go back to daily time frame now, so sometimes you want to check the dimension of the market trend. So now you talk about trend line. Sometimes you want to get it drawn line drawn, but if it cannot be drawn properly, that's where you go to a lower time frame or medium time frame and all of that. Can we have that here now? So let's look at it from here to here. So ordinarily you want to have several touch. So maybe here will have been a touch all this while when you are coming in on 4 hours. All right. So now this is the market. So let's go to 1 hour. So on 1 hour, the market is still an uptrend, right? Yeah. So look at where the market here, higher low, higher high, and all of that. So it's at the critical level. So the market's at what? At a very critical level. So you need to break, all right? So this is a high, this is a low. So you need to break this point and actually stay above. So that's when you want to look at the chance of taking a trade. And taking this trade, if you find a chance, so you're going to look to go back to a lower time frame. If you're a swing trader or you are intraday trader, so you probably want to go to 15 minutes and all of that. So you can see now, can I take trade here now? No. So can I short the market? The answer is no, because this is a key level. All right. This is a downtrend, an uptrend. So you just want to find. So sometime going deeper to get this thing properly, you go to 5 minutes. For instance, if you come for the first day, you will have find probably end market, buy, sell, all of those regions, right? So what I do in 5 minutes, is very simple. Ordinarily, if I want to scalp, or day trading. So if you look at it, it's a low, all right. So this is a high, okay, and this is a low, and this is a high, this is a low, right? So this is a high, this is actually a low. So now let's look at what this guy is doing. Now these are created a swing low, right? Now I just want some confirmation to buy, but I told you that this point is very critical because it's our key level, daily key level. So, but this guy had pushed back. I just want a two candle, one, the first one, and the second one, or one candle and engulfing candle. Then the next candle problem is going to open above this. Once a new candle open bullish above this, then I'm going to look at for way of longing, chain link above this point. And now if you do that, so very simple. So doing that is very simple. So that means I'm going to be doing like this, and I will take my stop loss below here because you are scalping or something. Now, so my take profit is going to 1:2. So that means I'm going to be entering at this 15.29 level, then I'm going to be exiting 15.45. It's about 1%. So if I use 10x, that's 10% of my money, right? If I use 5x, that's 5% of my equity, displaying in the market, right? So now, if I have more position opened, right? If the market break the structure, continue again, pull back, then I'm looking for. So you always find an entry at a pullback and not just when the market is running up. All right. So that's I'm not going detail of what is market structure. We've done that on our basic market training. So you want to attend our training, so you have to get enrolled and understand that. Okay, so look at this guy now, this 5 minute. So this guy now is planning to move up because so let's go to 4 hours. Right. So if we go to daily, do we mark this guy? Okay, we do. All right, it's okay. So let's go to daily, for instance. Go to daily, right? So this guy actually opened. This was yesterday, massively bullish, and then ended today. So today opened and actually went up. How do we know? Let's take a candle on top of this. Now you're going to look up, right? You're going to look up. So look up this place, this place. So if I place my candle here, is O is a 2166, 2166, and then H, which is high, 2193. All right, so it opens out 2166 and it went high of 2193. Low, that's the present price, it is right now. So okay, low, yeah. So okay, yeah. So we have the low. Okay, it has gone down. So there's a weak candle. The candle wick went down. So where it went down to so far, but market has not closed, remember? So it has gone down to 20112.48 today. And then current close, so which is the current price as it is now, it's at 2128 and all of that. Okay, so it's tend to be bearish for a while. So most time when I'm confused about this, because this is bullish. So if this market wouldn't continue, you want to look at, so we now use what we call true retracement tool. So what level will this guy retrace to and continue since it opened bearish. That's where we use like Fibonacci retracement, taken from the candle itself, from the low to the high of the candle itself, because this guy opened, probably didn't create any wick. Can you see? So you're expecting the market probably, if it can retrace down to this point. So I'm going to pick it out this way. All right. So if it's a shallow one, all right. So if it's going to be a shallow one or a major one. So I'm looking at the market to actually come back. So if I'm going to buy, I would rather have to wait to get back to 20,048, or so let's go back to this. I put this line on that 50. Okay, so this is 50. So anything below 50, which is 19,993, 19,993. So the golden ratio, 19,993 to 19,936, right? So which we talk about premium and discount. That if you are buying at this current price, it's premium. That you are buying it expensive. So that you want to wait for the market to return down to a level that is discounted. If you look at it aligned with all of the structure, and then so that's what you'll be waiting for. But there's something that you must understand. If the market, I just used the yesterday candle. If the market is going to pull back to that point, so and I want to be buying because this is a low, this is a high, this is a low, this is a high. So if I'm going to be buying here, I'm buying at a discount price. Now, some persons fervently want to now trade it back. Like me, I enter a short. All right. It has given a lot of money, but it has collected the money back again. So enter a short. Now, you're going to go to like 4-hour time frame to see that place you're actually waiting. Right. So this is 4-hour time frame. Right. This is a low. This is a high. All right. This is a low. This is a high. This is a low. This is a high. And this is a low. Then this is a high. Tentatively. Now, if I still do the same thing on 4 hours and take Fibonacci from the swing low to the swing high. So that means you are still expecting that, okay, the market should crash down much, but not to this point. We're still good, irrespective of where it comes to, right? But on daily time frame, on one daily candlestick, I've found out that, okay, by the time the market come here, now you are going to be waiting for some confluence. But one thing is that on these 4 hours, all right, on these 4 hours, we have fair value gap here, which you're borrowing from SMC, smart money concept. Now let's go to 1 hour. So that means the market can equally return down to this point. Yeah, you hear me right. And then this is another block. So return back to this point. And then, so you want to be patient to see a good pullback before you jump into the market. So this is 1 hour time frame, right? So there's no doubt the market is an uptrend. So whatever thing you are cashing or catching to sell, you shouldn't even waste too much time before you close it, because the market can just get extremely bullish and continue to move up and all of that. So 30 minutes is equally for day traders, all right? So if you look at it, for day traders who is capping with this now, whatever this market has been doing, so we talk about the support and resistance strategy. Having gotten this point, for instance, this was the highest, the wick, and then to the body of the candle, then that marks me, right? That marks me to be the support or the resistance. So as soon as the market gets to resistance and rejected, then you are shorting, right? That means I was shorting from here. Remember, I've checked my, so let's say I'm shorting from here. My stop loss is above here. If my stop loss above here, it can be 1:2. If it's 1:2, that means it's going to be here. That's aligned with 38 Fibonacci retracement level, all right? So that's one of the side for it. This is 30 minutes. So the same pattern. So still day trading, use 15 minutes, and so you're still going to have similar thing. But another thing we always check is that look at 15 minutes. Haven't shot the market, for instance, look at the way it's bouncing. Massive move. Massive move. You can see. And if you look at this massive move in 15-minute time frame, this massive move probably will be going somewhere here. You see? Why do I say so? Because that's a kind of fair value gap. All right. So it can be going up there to mitigate the imbalance, right? So you want to mitigate the imbalance, and then that's where you probably want to be finding another entry, perhaps, right? But let me now tell you one thing. When you short this market ordinarily from here, now you should be conscious of this low here, which was a liquidity, right? So look at it. So why we need to, this market is delicate now, because now it has come and grabbed this liquidity and it quickly ran it back into the zone. Okay, see? If I duplicate this now, so we're going to have something like this. So it has grabbed this liquidity and ran it to the zone. And that means you have to be very careful. So ordinarily, if I'm scalping, because you are counter, right? The trend is up. This is just like a pullback, but tentative reversal anyway. So what are you doing? So you have shot from here to here. You're already in money. So getting to this point, you will have taken some profit. Yeah, you heard me right. You will have taken some profit. And so the next point again of liquidity is down here, right? So look at it. So look at the wick, the body of the candle, right? So let's go here. And now the wick is so big. So any area in this point, the market rush into and jump back above this point, right? That's another area you want to pay attention to, as if the market want to, continue going up and all of that. So, okay, we even talk about fair value gap up here. There's another one here and all of that. Okay, so now the markets continue to go down. So, but at the end of the day, you want to wait. Sometime maybe people who you have been trending this market, so you probably want to wait, right? So, in fact, too many gap, on the net in the same kind of instrument. So you probably want to wait, to see where the market finally gets. Okay, you can see this candle now had closed above this. This is very risky, right? So this candle that just opened now, for it not to be too risky for you, the candle is very, very risky. Why? Because it's opening, it ought to have gone up first and then come down, right? This one, the open bearish, so that means it's going to go up. So if you go up, probably maybe to come and grab this. So some people, sniper entry traders, will have entered this market again and then to take profit here and put the stop loss down here. These are sniper entry traders, so they can take any positions in the market as they like. Because by the time you go to lower time frame, they're going to see the entry properly. Can you see now? So, he has gotten the fair value gap in 5 minutes, in 15 minutes. Now, so if he's going to take a position here right now, and now it's going to take a stop loss below here, and then, boom, to take profit over there. And if that's going to do, so look at it. So taking an entry, and then so to the mitigation. So that's not up to 1.4, 1:2. That can be 1:1 or 1:1.5 and all of that, because he's careful not to be dealt with in the market. Can you see now? Market is going right. Can you see how the market is going? Right. So because it has grabbed liquidity here. So if you are trading on that, like 5 minute time frame and all of that, even going to lower to 1 minute, you will have find an entry. Can you see? This is a structure, low, high, and low. And then this is broken already. And so you're going up here. But you can't just jump up here. You must have done the basic thing and all of that from the beginning. So but like all said and done, even if you return back up here, you still expecting that when you get back here, once it's rejected, you want to sell down more to make more money and all of that. So that's for this instrument. This is NAS 100, right? This is NAS 100. So you can see, right? See now, it's bouncing up, right? I told you that this candle open and it open bearish. So once a candle open bearish, remember, because the market is tend to be a contraction, expansion, and delivery. Okay, contraction, expansion, and delivery. So if that's the case, so this market should go up. So contraction, right? Contraction, expansion, and then delivery. So which I call CED. What smart money concept called AMD. Okay, accumulation, accumulation, AMD, accumulation, manipulation, and AMD, accumulation, accumulation, manipulation, and I don't know what you call it, the other one. So I call it contraction, expansion, and delivery. And that was what has happened here. Liquidity grab down here. And like I told you, I say if you are a scalper, you will have scalped this. Because having come from 15 minutes, you see a fair value gap up here.